Hey, what's going on, everybody? This is Oliver, your host of the Third House on the Left podcast. Hope you're having a good time. You are listening to Jim Chuong's interview part 2. So, if you haven't listened to the first part, I highly recommend to you because it was really good and I had to cut this one in two. So, let's not keep you waiting. Guys, let's hear it part 2 with Jim Chuong. Like that guy from
Miss,
Minnesota.
yeah, from Minnesota. So he was the first one that I bumped into because I was only a stock investor up until that point. I never had any direct experience with real estate except buying maybe one or two houses in expensive Toronto. So I did, but I understood it because I kept reading real estate. I kept reading about it, reading. And what people don't understand, because I've been successful at investing in stocks and real estate, is that they have different packaging, but underneath it's the same thing. If you think about the S&P 500 index, it's the 500 largest companies in America with an income statement and a balance sheet, and it's run like a business. Real estate's the same thing. They all have an income statement and they all have a balance sheet, and it's run like a business. Real estate is a business, and the US stock market consists of dozens of businesses.
Mm-hmm.
So when I learned stocks, if I can interpret the financial statements of a business, then I should be able to interpret the financial statements of a real estate. It's just sort of a niche business, just like McDonald's is a different business, and healthcare, it's just different. So, but I had never done it practically, so I didn't understand the whole concept of scale. Because in stocks, there's no scale. You just buy an index or you buy shares, and you look for certain things. I look for certain things, but there was no talk about scale. And so this was the first time I bumped into someone in Arizona, and I still didn't understand what he was talking about. I thought he was just talking about, I just have more money so I can buy more than you. But
that was kind of a wake-up call for you, actually.
It was. Unfortunately, it was too late because the market took off. I stopped buying around 2014 or 15, and the market just took off.
Yeah.
And the Canadian dollar collapsed. It was not only so it was working against me. The dollar was worthless, and then the housing prices went beyond what any cash flow metric would make sense. But this idea of scale, to be able to control more units with the same amount of money, because he was buying at $30,000 a door, which was cheaper than me, even at my cheapest. And getting that scale, so he was getting significant cash flow. You can imagine how much cash flow you're getting, probably 60 to 80,000 in raw cash flow a month.
A month, yeah.
Right, that's 60,000 a month at the 1,300 a door a month level that he's at now.
U.S.
So
also.
Yeah, well, he lives in.
He's
from the U.S. For me, that would be huge.
Exactly. Yeah.
But I reached my goal. I replaced my household income and more with rental income from the U.S. And at that point, I still continued to work because my parents had told me, you need to work. So I kept working, but eventually it becomes. I'll tell you when it becomes silly when it started becoming silly to work was, I had rental income and I had salary, and they went into different accounts because my rental income is America, and then my salary is the Canadian account.
Yeah.
When I worked, the salary went in and it never came out. I never used it.
You never used it. I see.
So after you finish working a couple of years and the money is just sitting, you're like, why am I working? I'm not even using the money I'm working for. So at that point, I said, "There's no point. Like, I feel silly. I feel like this doesn't make any sense. Like, I'm not even using the money I'm making." And as you know, employment income is heavily taxed.
Yeah,
it's the most heavy tax out of all sources of income. My dividends from my stocks barely touched, and my rental business, I can burn down all my expenses before they even hit me with tax. I just use all my expenses, paying for this, paying for that, going to check on my property, and then they tax me at the bottom, the small bottom. Whereas
this makes a major difference, and that's what actually, most people that are working and have a salary don't understand. Of course we don't get security, we don't get retirement, they don't get all that stuff when you have a business. When you can write off so many things that you barely get income tax on it. So
That's why, unfortunately, I grew up poor. So I totally sympathize with the inequality and financial inequality because I experienced it. But when I hear people say we need to tax the wealthy or the financially free, that won't work because of that reason. Number one, people who work get taxed at the highest rate. 20, 30, 40 plus percent, maybe in Canada even higher, depending on your income, maybe over 50%, your marginal tax rate. It'd be very high. Number two, you don't even see your pay. Your pay is you're taxed at source. It's called taxing at source. The employer pays you, the government takes a huge chunk, and then you get what's left over. So most of it's gone before you even see it. The people who are financially free, they make revenue, they spend all their money, and at the end, there's nothing left to tax. So taxing the financially free makes no sense. You can make a huge tax, but you're not taxing anything. There's nothing left to tax.
Exactly.
That's why taxing, another mechanism has to be created to address this inequality problem. I don't know if it'll ever be addressed, but taxing is not going to be it. It won't be based on tax.
No, no, I don't think so either. And then
anyway, that's a side point.
Tell me a little bit, like, because I want to talk also about money, because I know you're good at money. You're educated about it. You know you read a ton of it, and like I've noticed that a lot of people around me, they don't know. Well, and I don't blame them because it's not in the education, you know, and it's taboo to talk about it. So people are afraid to talk about it, but it's so important. I mean, it drives the economy, and it's important to know, like, what do you have to do with your money? Like what does it serve, and what is it exactly? You know, because it's basically it's just paper. You know, it's just a measurement of service and product. But it's, you know, you shouldn't hold on to it. You shouldn't have emotion about it. It's just numbers.
So unfortunately, when you grow up, I'll tell you a secret. It's a secret right now that your listeners probably don't know.
It's just between you and me.
Yeah,
and
that's between us.
Thousands of listeners.
The secret about money is that it's not real. It's not real.
There you go.
It doesn't exist. And so people say immediately, well, how's that possible? Like when I buy something, I get something. So it's real. Like I can exchange this paper for this chocolate bar and I get a chocolate bar. Mm-hmm. I'll put it in a different way because I've been investing since the 90s. When you buy a house for $200,000, and let's say we have the credit crisis, let's go rewind. You buy a house for $200,000. Why is that house worth $200,000? It's worth $200,000 because everyone in the neighborhood who has sold their house has decided that in that marketplace, that is the money value of that structure and that land. Mm-hmm. The market value. The market has decided that is it. So you say that's worth $200,000. What happens when we have a credit crisis and the house goes to 50? At that point, the market says that house, that structure, and that land is worth 50. Where did the 150 go? It went nowhere. It disappeared like it never existed because it never did exist. And this is why you can see some entrepreneurs, you know, in the UK and America and Canada, they can create money by providing value like that. They provide a little bit of value, they make a connection, they provide a service, and all of a sudden money comes. It comes out of nowhere because it wasn't real to begin with. So the poor and middle class don't understand that, number one, money's not real. So what they do is they try and hold on to it. Like I need to, during the virus crisis, they want to conserve, you know, fight or flight, conserve the money. But money is called a currency for a reason. A currency, from the word current, is like a river. You cannot hold on to money any more than you can stop a river by hugging it. You cannot hug and hold the river to stop it. It will continue to move beyond you. And an example is if you had $100 and you bought a basket of goods and services today, you can notice that your money is draining from your fingers 10 years from now, because when you go to the marketplace to buy the same goods and services, you're buying a bit less. You can't buy the same amount that you did before. So that already
Mhm.
shows you that the current is already moving. But because we cannot see it move like a river, we think it's physical. So we hold it. But that is not true. Money is not real, and you can't hold on to it. You need to get off that idea that you need to hold on to it, or that it's worth something. So that's the secret that most people don't know. They don't know money's not real. And it sounds ridiculous when you hear it, but the evidence is
Yeah.
around us.
So I mean, I've had so many points that I want to bring just with this idea, because I first time I've heard it was through Marshall Silver. I don't know if you know this guy,
No,
guy from the States, really good. You should look it up. Marshall Silver. He
Marshall
talks
Silva.
about velocity of money, and it's actually, I know, another way of saying like current or flowing money. It's just the velocity of money is how fast can you turn around? How fast does the money goes from one point to another, to another, to another, and the faster it goes, the more value it has. So it's not that, it's not $100. It's how fast does the $100 goes. That's what makes value, and it's super great. And that's the first time I've heard it, and it kind of like it was like, for me it was like, wow, it's eye opener, and I was like, okay, wow, okay, now I get it. And then you talked about the value. It's exactly it. It's a perceived value of an item. So if you had value, like you were saying, as an entrepreneur, we need to add value. So if we add value, then the perceived value will be higher. So then you just created money. Boom.
It's money, or the money is just a symbol. Just picture it as a
Yeah.
symbol. It's symbol of what something is worth in the mind of the marketplace. So I remember I made a TikTok video that got, I don't know, 100,000 views because I said, I'm a landlord. I don't set the rent. And everyone said, what are you talking about? You're a landlord. You set the rent. I said, I don't set the rent. And he said, every landlord will tell you I set the rent. I do not set the rent. I'll tell you who's setting the rent. When I decide to rent my place, your neighbors are setting the rent. The neighbor beside me and in my neighborhood and in my community are they're telling me, the landlord, what I should charge you. They're telling me what a 1,000 square foot, 3-bed, 2-bath structure should be charged for rent. What should I charge my tenant? I look in the marketplace and other tenants are telling me you should charge them this much. I don't set the rent. I could set it to 5,000 a month, but I won't get it because I don't set it. If I set it, I would set it to $1 million a month. But because the other tenants in your neighborhood are telling me what to charge you, they set the rent.
Yeah, it's a good point.
So
Absolutely.
money is basically the value you perceive that is given. And you can create a business and it creates value right away. You get contracts and all of a sudden there's a money value there. It's just a symbol. It's just a symbol of what something is worth. And the same thing happens in the stock market when companies crash below during the Iraq War, 1990. I remember I was looking at balance sheets of very simple companies because, and I think it's still worthwhile. You need to look at companies that are very simple to understand. Wrigley's Chewing Gum, Coca-Cola, McDonald's. They're very simple. McDonald's, they own a bunch of real estate. If you look on their balance sheet, they have billions of dollars of real estate. And I remember during the Iraq War, the price of the stock fell to the price of a Happy Meal. I could
Wow.
control all this billions of dollars of real estate by investing in McDonald's because everyone's panicked because the war is going to start and the entire world is going to fall into a world war. And the price went from like $30 to $4, $5. It was the price of a Happy Meal. I said, this is ridiculous. Right? So that's exactly what happens in real estate. The difference between stocks and real estate is that opportunity comes more often in stocks. It doesn't come as often in real estate in terms of general market downturn. And that goes back to local market, global market. In a global market, like the stock market, whether it's yourself, Oliver, or myself, if we buy a share of Google, you could be researching it 100 times more than me, but we get the same price.
Yeah.
Same price of a share of Google. You do all the reading, the research, the uncovering of financial data, but it doesn't matter. We get the same price. In a local market like real estate, You do the work, you find the area, you fix up the house, you get a better price. I'm not as knowledgeable about the local marketplace. I get the worst price. And that's how global and local markets work. Now, in a local market, you need to work hard to make your money. You need to dig, you need to look around, you need to work, connect, meet people, knock on doors, send letters. You need to do the work. In a global marketplace, you just sit there. I just wait. And eventually, inevitably, everything tanks. Everyone runs away like that old lady that needs to sell that house. And I just go in and I say, wow, look at this. The entire US economy is on sale. I'm just going to just buy.
Exactly. The economy is on sale. That's a good way of saying it, because that's exactly it. People are afraid, they're not buying. So demand goes down, offer goes up because people want to sell. Then you get discount.
That's right. And if you believe that money is real and you cling on to it, you're too scared to let go of it to take advantage because you think it's real.
Yeah.
So you'll see opportunity pass you right by, but you're saying, this is real. I have to hold on to it. It's not real. You're losing. You need to let go. Let go of this idea that it's real. Let go of this teddy bear, this security blanket.
So then if I put my mind in somebody's head, they would probably ask themselves like, okay, well, if it's not real and I got like, I don't know, 10, 20, $50,000, what should I do with it then?
So that's a fantastic question. Again, because money is not real and the use of money is governed by the mind behind it. For someone like yourself, who's knowledgeable about real estate, or someone like myself, who's knowledgeable about stocks, we would know where the opportunity is because our brain has been conditioned to recognize it. An example is sort of like when I used to live on my own as a student, and I used to go grocery shopping. And as a student, you're poor, so you would treat yourself with chicken. Chicken is like meat is like, normally you'd have pastas, but if you wanted to treat yourself, you would buy beef. I knew when chicken was on sale. You knew how much price per kilogram is a good deal and what's regular price. No one needed to tell you that because you would see chicken at a certain price all the time, and then all of a sudden it'd be half off. Like you would get like 2 breasts for like, or 2 drumsticks for half the price, or whatever. You'd get some deal. Yeah. And because your brain is conditioned to look at that and identify it. So if your brain is conditioned to look at a balance sheet or an income statement, you're just conditioned to look at it, you'll see 99% of the time, regular price, regular price, regular price. And then that 1% time, your brain goes, what? Hey, there's something there. That doesn't look right. I need to look a bit further. And that's how you uncover real estate. So someone who has $50,000, if they haven't conditioned themselves to find these discrepancies, whether the chicken is $10 a kilo or 50 cents a kilo makes no difference to them. It looks the same. It looks like chicken, right? But for someone who has conditioned themselves that says, no, the chicken should not be 25 cents a kilo. That's not right. I need to buy it now. If you're not conditioned that way, even worse, if the market makes you scared because you feel that this money, which you think is real, is disappearing, you get scared and you can't identify anything. So to tell someone what to do with their money is not productive because they can't identify what's a deal and they think it's real. They think the crash is actually destroying money. It's not. So it's very difficult. So you would deploy 50,000 different than I would deploy 50,000, would be different than Mr. Minnesota would deploy 50,000.
Right, yeah.
So it's hard to say what someone you would need. That's why financial planners, is very important for them to sit down and understand their client. And that's why they talk a lot about what your risk tolerance is and all this other stuff. So they make it understandable for them. Yeah. But for us, it makes no sense. If you sat down or I sat down with a financial planner, it would be a funny scene. It would be, it wouldn't make any sense. Because
I sometimes get those phone calls like, hey, you should buy Bitcoins, or like, hey, you should invest into stock. And I'm like, well, I mean, I appreciate, but I invest everything in real estate. So, and I know that it's the best thing because that's what I know. And I don't know anything about Bitcoin. So they're like, well, you shouldn't. Yeah. I'm like, thanks. But I mean, I don't know anything about Bitcoin, so I shouldn't invest in that. So one point would be like, it's true that we shouldn't tell people what to do with their money, but they should invest in something they know. And if they don't know anything, well, they might, educate themselves.
You need to invest in yourself and learn an asset class. I don't care what you pick. You can pick bonds, you can pick stocks, you can pick real estate. And real estate is very difficult because there's 50 things you can do. You can do zero down financing. You can do fix and flip, BRRR. You can do notes. You can do rentals. You can do a whole bunch of stuff. So pick something and just learn that. And then at least you have a foundation to learn something else.
Yeah. So as long as we're not holding on cash somewhere, like in the mattress or something, it's not a good idea.
Yeah, but most people do that because they think it's real. They think the money is real, so they'll hold on to it. But unless you educate yourself, you're going to continue to have that illusion. That illusion is going to look real. It's going to be hard.
Absolutely. Yeah, I want to talk a little bit about all this pandemic happening and everything, and where do you think this is going? What do you think? Like, is there any opportunity to take out of this? What do you
That's
think about
very
the
difficult
economy right now?
I never make predictions. So one thing about
Fair
I don't know if you heard about market timing. Market timing, most people say, "Oh, market timing is bad. Market timing doesn't work," but it works. That's the secret. The big secret is that market timing actually does work. The way that you're taught market timing doesn't work. So in COVID, the stock market went into bear territory in March, end of March. So obviously that for me was easy. So I purchased, like you said, with the money. What did you do? Well, there was a bear market. I bought stock because that's where the opportunity was. I also looked at U.S. real estate. There was no obvious opportunity, with the limited digging that I did. So I didn't do that. But when it comes back to market timing works. But what they don't tell you is how it works. So most people, when you're educated, when you ask them, what is market timing? They say, oh, I make a prediction about a certain asset or a certain market, and then I bet either that it's going to go up or it's going to go down. It's like a prediction-based model. That's the wrong way to do market timing. That doesn't work. That's correct. How market timing works is, oh, look it, the virus crisis took the stock market in the US into bear territory in March. The market has been destroyed. I'm going to buy now. I'm buying based on market conditions. I am market timing. Now, financial planners call it rebalancing. If you've heard this term rebalancing, what they mean is that they have a certain portion in stocks, a certain portion in bonds. If stocks go too high, they sell it and they buy more bonds to make a certain allocation. That's market timing. They don't tell you it's market timing, but just because the stock market has gone up and then you're making buy and sell decisions, you are buying and selling based on the market. That's called market timing. But if you say market timing, everyone says, oh, bad. Let's call it rebalancing. Rebalance. But that's just market timing. So what they're doing and rebalancing when it comes to a financial planner, they're not looking to take advantage of the market like I am, or like maybe you would. What they're trying to do is trying to manage the emotional temperament of their client, because their client gets very upset when the equities start fluctuating and they get bigger and they get nervous, right?
Yeah.
So why they're rebalancing, why they are market timing, is to manage their emotions of their clients. Me, I'm taking advantage of market timing because I want to make free money. When chicken is free, I buy chicken. I just want to make money. But for them, it's a different reason. So the economy, where it's going, I've read everything about the CMHC. They're worried about the debt cliff.
Yeah.
I noticed that the big 5 banks have increased their loan loss provisions by almost 5 times to $11 billion. Almost 1 million Canadians are expected to defer their mortgage for 6 months or more, which again shows you that a house is not an investment. That's another big misconception, which you don't understand money. You think money is real and you think a house is an investment. It's not an investment. People get offended at that, but that's another story.
But when you take account the like maintenance, inflation, and everything, I mean, you get even with a house. So no, it's a liability, 100%.
That's right. And so where the economy is going, it doesn't look particularly good. Some of the jobs that we've lost are maybe permanently lost. So it doesn't look good, but for whatever reason, as long as interest rates are low, the government seems to be satisfied with holding everything up by providing cash into the economy. So we'll see how that ends up.
But logically, doesn't actually pouring money into the economy will create inflation?
It hasn't been true so far.
Okay.
We don't seem to know how to get inflation going. But again, it's hard to see a case that interest rates go up and inflation goes up. For me, it's very difficult. I don't make predictions, but I don't. What would I'm thinking in my mind? What would have to happen for the economy to pick up so much that interest rates need to be increased, and and then everything's running at full steam? It feels like the opposite. It feels like we're just treading water, and the economy is kind of directionless, and some jobs may be permanently lost. Some industries may have been invented during this crisis. A lot of jobs get invented during crises.
Yeah.
Same thing happened in the credit crisis. Property management companies and flippers came out of everywhere. Everyone flipped everything. And I remember BlackRock, the company, sent a team of hundreds of people just to buy property. They didn't even care about the price. They just bought it cash. Boop, boop, boop. So I don't know where the economy is going to go. I know a lot of Canadians are struggling right now because mortgage deferrals aren't free. The bank wants their money with interest. So that deferral is going to hurt. And if the jobs don't come back, people are going to have to do something, because the house is not an investment. The payments need to be made. The bank wants more of them. So either the homeowner or the bank will have to come to agreement to push out the amortization 15 years to 20 years to 25 years. The government may have to sit in and say, you can do 40-year amortization again. We'll go back to 40-year AMs, and we'll push amortizations out so that people can manage their payments, because right now they can't manage them. They might do something like that. So there's so many options that could happen, but I think the options that will happen are going to be those that make it easier on those who have suffered hardship during the crisis.
Yeah, well, already, I mean, interest rates have been lowered to 199, so
they're not going anywhere. They
no,
might
I
go
don't
lower.
think so either.
199 fixed, 170 a variable.
Yeah,
that's insane. Money is free. It's literally free. I mean, that should tell you right there that money's worthless. Like when I tell you that money doesn't exist, that should tell you that money's worthless. Number one, when you give it to the bank, they pay you nothing. It will take you to, they charge you. To hold it.
Oh my
and
God.
what do banks do as soon as they get your money? They're like, we don't want this. We're lending it out right away. We push it out the door. Get rid of it. We don't want your money. So that's two big hints that money is not real, money is not wanted, and money has no value. Should tell you right there. So where the economy is going, we'll see. Either way, you should be prepared. You should be prepared to take, if you're like us and you can identify opportunity, you should be looking all the time. I'm always looking.
So then the question comes, like, how does one prepare for to take up?
That's a really
to take advantage of this.
So as we talked about education before, when I started investing, there's the most famous quote in investing is by Warren Buffett. Be fearful when others are greedy, and greedy when others are fearful.
Yeah.
Everybody says it. Hold on a second. I cut off there. My wife was calling.
No worries.
So the most famous quote in history, everyone says it, everyone talks about it, everyone quotes it, but no one uses it, which is a big mistake. And that goes to your question. How do you take advantage of opportunity? It's right in the quote. And two billionaires have said it. Warren Buffett was the first. John Templeton said it earlier. But Grant Cardone, who's a big multifamily real estate investor, said it in one of his most watched YouTube videos about how to become wealthy, how to become a millionaire. He called it a storage account. So this is how it works. When you start, anyone who starts, you need to have 3 buckets, 3 containers, okay? Because you don't know how your life is going to go.
Mm-hmm.
Life can go anywhere. So the first container is your emergency fund. I don't care how much you can afford, $50 a month, emergency fund bucket gets filled up in a high interest savings account until you can cover 6 to 12 months of your living expenses. So you're just building that up. Your second one is a low fee US index where you're growing for the future because you don't know how far retirement is. You're starting again with the same amount, $50 a month, $100 a month, 500, whatever you can afford. You're putting the same amount in those 2 buckets. Emergency, because you get let go, you have a medical problem, you need that. And then your retirement, long-term growth, tax-free bucket. The third bucket is called the storage bucket, where you store money. This is different from saving money. You never want to save. You store it. You store it because, like I said, in 200 years, markets have always gone up and they've always gone down. Always. It's never different this time. So the storage bucket goes in until you have an opportunity. And in the meantime, while you're doing the 3-bucket rule, you're reading about an asset class, real estate, stocks. So you're studying. So you can better identify that cheap product. So you get better at it while the opportunities may not be around or not as obvious to you. And then when the opportunity hits, Black Monday, credit crisis, Great Recession, .com crash, now you have a storage bucket. Now you can be greedy when everyone is afraid and selling. You have that bucket to take advantage of the quote. If you didn't have it, you can't do anything. Doesn't matter and if you're not educated, you can't do anything. So you need the combination of education and that third bucket of feeding. You need to feed that resource. So right now I have all three. I have all my emergency fund, I have my growth assets, and I have my storage because I'm looking for opportunity. And then when March happened, I pushed in, and then you start to replenish your bucket, your storage bucket again, because you know it's coming again. It's coming over and over and over again. So that's how you would take advantage of opportunity. So whether it's going to be real estate in Calgary or stock market in the US or a condo in Memphis, I'm ready. I'm prepared. So that's how you prepare.
That's a great advice. I love this actually, and it's really good. And you know what? Education right now, it's so cheap and so easy to get compared to back in 20, 30 years ago. I mean, right now you can go on YouTube, you can, listen to podcasts like this, reach people. It's so easy. I mean, most of my education actually was on the internet for free.
Really?
At some point, you might have to pay for it, if you find someone that you like. But it's easy to get the basic information, basic education. Everything is free on the internet. So guys,
it's a great point.
To this, go and get education for free.
Great point. And I think in addition to your podcast, you're on other media platforms as well. So they can get education from other media platforms. Myself, because I never started social media, if they come to my TikTok channel, I just give 1 minute, short 1 minute episodes about information about stocks and real estate very quickly. So it's easy to consume. So there's no excuse. The information's free and it's easy to consume.
Well, actually, tell me, how does people could reach you? So you're on TikTok? Are you anywhere else?
I'm on TikTok and I'm on Instagram, but Instagram is only a copy of most of my TikTok stuff. So
what's your
TikTok? It's tiktok.com/ the @ symbol at Jim, JimChuong, and that's it. So tiktok.com/ @ Jim Chuong.
Great. I'll put it in the show notes just to be sure that people can look at it. It's really good. That's how I came across Jim, guys. So I mean, he's putting out really good stuff. I love it. So,
but that's pretty much how you need to get educated and take advantage of opportunity. Like you said, it's very important. And you're doing a great service. I couldn't do a podcast. I don't even know how to start a podcast, but the information in here, if you're interested in real estate, if you listen to Oliver's guests and himself and all the experience, you're tapping into, can you imagine if you had to pay a mentor to learn all this stuff and you're getting it for free?
Exactly. That's the point. For free. I mean, and sometimes people think that there's no value because it's free, but no, it's not it. I mean,
it's what you do with it.
Exactly. There you go. Jim, I mean, thank you very much for sharing all of this. Thank you for your time. Really appreciated.
Thanks, Oliver. I love being on here.
Yeah, so thank you. If you want to reach Jim, is on TikTok. He's on Instagram. Well, first, actually go on TikTok. If you don't have it, what are you doing? I mean, it's a new platform now. Everybody's on this. Got a billion user. So anyway, go on TikTok. Go and see Jim. His videos are amazing. Just a little quick note before we leave, guys. Jim is writing an ebook right now. So how does people can send you comments or have access to that ebook?
So the ebook is about financial freedom. It's called Financial Freedom Now: How I Escaped the 9-to-5 to do whatever I want, whenever I want. Go to my TikTok profile and there's a link there that will take you to the book where you're allowed to pre-order it from Amazon. The book will be out this fall and it chronicles my journey in terms of working and grinding into becoming financially free. And if you want the same thing, go there, go to the link, download it now.
And thanks for listening, everybody. Jim, that was amazing. Thank you very much for your time.
Thank you.